Hey folks, welcome back to the channel. It's Liquid here. So last month I bought 100 shares of Shopify at around 577, and at that time I was pretty bullish on the stock. There were some indicators showing that it was going to trend up. However, I was totally wrong and the market went in the opposite direction, taking Shopify with it. And it just kept falling more and more. What I should have done was put a tighter stop loss on my position and gotten out at around 450 or even 500. But instead, I held on to it until just this past week. I decided to sell it, and I sold it at 362, which of course it's much lower. So I basically realized a loss of over $21,000. Now, I did make some additional premiums from Shopify options. So overall, let's say I'm down about 20,000, but still that is a lot of money. So this just goes to show how risky trading in the markets can be. One of my biggest mistake here was to not have a solid plan in place for what if I'm wrong? Maybe I'm looking at some false signals. So, what can I do if the market goes in the other direction? And in this particular case, because technology stocks are in a bear market, the proper answer is to keep the stop loss very tight, meaning if the stock goes down, I have to exit the position fairly quickly, even if I do think the stock will eventually go back up. So, unfortunately, because I didn't have that mentality in place, I waited too long and ultimately paid the price. So, here are a few questions that you can ask yourself to reduce the chances of this ever happening to you. The first is the stock market going up? And this one might sound obvious, but if we're currently in a downtrend, it's probably not a good idea to put all of your money into the market. As I mentioned in last week's video, dollar cost averaging in this kind of market is probably a good idea. Don't put too much money in at once, especially when there's no clear signs that the market has bottomed. The second question is, what is the risk here versus the reward, and how much are you willing to lose? And it's really important to define your downside before you open any position. And finally, what is your exit strategy? How are you going to close out your position once you get in? Are you going to sell if the stock goes down? Are you going to sell if it goes up? How tight do you want your stop loss to be? So it's really important to think about these things. And there could be many different reasons why I was wrong this time. But in general, the best way to put it is the market had become more bearish than what I thought was reasonable. I thought the NASDAQ composite had a really strong support at around the 12,800 level because there were multiple opportunities for it to drop below this, but it hadn't yet at the time. But then it finally fell through, and I knew there was a chance that it could do that. So in last week's video, I said that if it did fall below that support line, then the next support is going to be that 200 EMA, which is at around 11,300. And once it hits that point, historically, it should bounce, just looking at the graph, which is actually what happened over the last couple of days. The NASDAQ did hit that purple line, and we got a couple of green days on Thursday and Friday. So now the question is, will it fall below this purple line? And I'm not going to rule anything out. I think there's a lot of bad news out lately, which could eventually push the NASDAQ down to the 10,500 level. And we'll have a better confirmation of where the market is going in a couple of weeks. Because either we're going to have a bullish break of structure, which will basically mark the turning point of this bear market, or the index will continue to fall further, wiping out the gains in the last couple of days, and will reach a new low. I was caught off guard by the market this year, mainly because this is basically a very rare occurrence, at least in my lifetime. The Dow Jones Industrial Average, which holds stocks like Microsoft, McDonald's, Visa, and just a wide basket of the economy, it's down 7 weeks in a row. And I was born in 1987. From then until now, this has never happened before, like other than this one time. So you'll have to go back a very long time before you see the Dow dropping 7 consecutive weeks. So that kind of gives you an idea of the magnitude of the stock market pullback. Here's something else to show just how rare recent movements have been. Over the last 10 years, there have been over 2,400 trading days, and only 14 of those have seen worse daily returns in the S&P 500 than the really bad Thursday we had last week. That's like a 3 standard deviation movement statistically. CNN Business has a fear and greed index, and it reached 6 at one point over the last week, which represents extreme fear. In fact, this level of fear is one of a kind over the last couple of years before we had extreme fear, but the score was like 10 or 12. 6 is definitely not normal. However, I am hopeful because once things start to turn around, there's going to be a lot of opportunity to buy very high quality companies at attractive prices. This is why I've talked about selling puts before, but I have to emphasize that I'm not putting all of my money into the stock market right now and using these put options to buy stocks. I still want to average in because this might not be the bottom. So I want to be more defensive than aggressive at this time. The time to go more aggressive is when we can see a clear uptrend in the overall stock market. And I don't think we're there yet. I think we need to see more positive economic news. And it could last a couple of months or maybe even a couple of quarters for that to actually happen. We could see further declines in the stock market. So being patient right now is going to pay off later. A classic break of structure signal I'm looking for right now is the stock market going from a lower low to a lower high and then drops down to an even lower low. But then when it comes back up, it goes to a higher high and drops back to a higher low. That shows a slowdown in the selling pressure, so it's an indicator that the stock market may have reached the bottom. Another thing I'm looking at is the CBOE equity put call ratio. When people are super bearish, there tends to be a higher demand for puts, so this put to call ratio would go up at peak fear. And historically, when this ratio went above 0.85 on a 3-day moving average, it correlated fairly well with the bottom of a stock market correction. And finally, we need to see inflation come down substantially for the stock market to believe the worst is over. And right now, I'm not seeing any positive signs from these three signals. From a technical perspective, the stock market hasn't indicated it's bottomed yet. The put call ratio still hasn't peaked and stayed above 0.85. And the most recent inflation numbers are 8.5 and 8.3 in the US. So we may have to wait another month before we actually see a trend and have more confirmation that inflation has peaked. So until any or all of these indications tell us that maybe the worst of the bear market is over, it's very risky to put any money into the markets right now. So if you do, just put in a little bit, dollar cost average very slowly because you want to wait for when the stock market reverses and starts going back up again. And if you see clear indications that that's happening, that would be the time that I would feel more comfortable putting more money into the market and being more aggressive with my buys, but still doing dollar cost average and not putting all of the money in at once. And of course, if you've picked up just one insight from this video, it's put in a stop loss for yourself so you know when you have to sell if the market has a fake rally and the indications were wrong and we go further back down. You have to plan to get out with your money. Even if it's like a small loss, it's better to have a small loss than to risk a big loss. And you need to plan for what you're going to do before you start a long position in any stock. So even though I'm down a lot over the last couple of months, I do see a lot of potential for future returns and growth in the stock market. I'm just more careful now about my timing strategy and when I'm going in, how much I'm putting in, and also just being very cautious about the movement of the stock market. So don't get scared or put off by the stock market because you see other people losing money. Use that as an opportunity to learn from other people's mistakes so that you can become a better investor yourself. Anyway, thanks a lot for watching, and I'll talk to you in the next one.